Hey, hello, ladies and gentlemen. Welcome to 44's channel. Right now, let's try to explore how Warren Buffett select a good quality stock. First, I want to make a disclaimer for this video. This information is only for education purpose. Please do not engage in trading unless you fully understand the risk. And also, actually, I think it should be a proper process for people to test their idea. First, they need to test their idea, right? And then put a small amount of money in real trading environment. Let's say 5% of your trading capital. If it works, and then you can try to scale up, right? I think this idea is not my invention. It is actually brought by this person who is called Edward Thorp, a man for all markets. Actually, he's an legendary investor who had beat the markets for many years with more than 20% return, compounding in return. And so also actually I'm highly recommended you guys to read his book, The A Man for All Markets. Actually, there are many nice formulas bought by this guy, including the Kelly formula. In nowadays, actually, we can use some new modern techniques, let's say machine learning, trying to optimize your trading base. Anyway, I think I will leave it to a more advanced class later. So right now, let's jump right into the main meat. Warren Buffett's ideas on how to select a good quality company. We can take some of his ideas in his Berkshire's company letters to his shareholders. I also recommend you guys to read those letters. Yeah, pretty insightful and useful. So in one of his rules, he mentioned that a good investment must meet the following two conditions. One is that the average ROE for the past 10 years is higher than 20%, and the other is that the ROE for low 1 year in the past 10 years is less than 15%. So here attached great importance to the ROE indicator. Okay, so this is what we will try to do in our demo. First, select stocks based on this ROE indicator. We know actually there will be tens of thousands of stocks in each market. It can be very cumbersome to read all those financial papers, to compute all those financial ratios. Nowadays, with the help of the Yahoo Finance, we can just use some simple Python script to do this job. After we select the companies with a nice ROE, actually Buffett he also mentioned he used dozens of metrics to gauge the financial health of the related companies. He didn't he had mentioned some of those ratios, and later on, Mr. Piotroski came up with nice ideas about Piotroski score to rank the stocks. So actually, just purely by using Piotroski scores, people can already achieve, let's say, over 20% annualized returns over the past few decades. So that is also quite amazing. So in this tutorial, the second step is trying to use the Piotroski score to rank the stocks that pass the filter in the first step. And thirdly, actually, we need to use our human discretions to do our own homework. Let's say we then need to read those newspapers and use our own guts to judge whether those stocks should our list or not. And then for the final ones, we can apply the modern machine learning techniques like the random forest to train those price features such as Bollinger Bands, moving average, mean-reversion related indicators like the bars, and other technical indicators like KDJ, RSI. And also we can use some Markov-related patterns, e.g., for examples, several consecutive ups or downs, like 5 or 6 consecutive ups, then maybe the trend will be reversed, right? So actually, by using these techniques, we will be able to figure out when to buy and how much to buy, and also we can figure out when to sell and when to and how much. Anyway, people will argue that, I would like to be a long-term investor like Warren Buffett, but I want to correct you guys one thing. Even for Warren Buffett, he is using the techniques like the Kennedy formulas to do long-term cash, equity, stock, and bonds allocation, right? Like nowadays, actually, he had already reduced his stock positions to less than 50%. And back in the 1970s, right, he even closed his entire Berkshire partnership, right? Because those stocks are already pretty expensive. So actually, buy and hold, we need to take it many factors into consideration. Like in the United States, the capital gains are pretty high, but in Hong Kong or in mainland, actually there is those things like capital gain, right? If you can make money, okay, you can take all your So actually there will be also many details. So I think I can talk them more in the following training courses. So right now, let's jump into the code. So here, so those are the required libraries we need to import. Okay, this is just the doc string. I put what Warren Buffett said here. And this part is I had created a class. And initiate the ticker informations. In the ticker informations, we will be able to have all those fundamental informations from provided by Yahoo. Okay, and then let's go to the first step. The first step is, let's say I will try to test the filters and sort it, and then I will get the raw stock list. And actually I have some utilities. Let's say trying to get the tickers from A share, B shares, H shares, and later I will also put the S&P 500 and other stocks like Indian ones into this repo. So this is just some basic ideas. After run this, actually then I will get a list. Later. Those are just a row list. Those are the very first beginning steps. And after that, I will use the Piotroski score to rank all those stocks. And so let's try to go over the Piotroski score. The Piotroski score is broken down into the following categories: profitability, leverage liquidity and source of funds, and the operating efficiency. And Piotroski scores attached great importance to the profitability. It gives 4 scores there, right? Okay, it gives 3 scores to the leverage, liquidity, and source of funds, and he gave 2 scores to the operating efficiency. And take one of the point, net income point, for example. Let's say if the return on asset in the current year is positive, then this company got a 1 Piotroski score. Let's say even one company only earn $1. Okay, he can also earn 1 Piotroski score if he earn about 1 billion. So in this criteria, it is also 1 score. So as we can say, actually this scoring ranking system is so basic, right? Actually, we can do a lot of enhancements based on that. So after doing those researches, actually then we will be able to get some kind of list later on. I do not want to, and then, yeah, I do not want to just want to share the stock list to you guys and trade, because you need to utilize human discretions to conduct additional research. So those 2 steps are just the tools we can be able to utilize to filter out 95% of the stocks that don't make any sense, right? And then after this, after using those are just the tools. Don't be fooled by those fancy terms like, okay, what is quantmental analysis, machine learning, all those things. Those are just the tools to help us to make our work be more efficient. Okay, that's it. That's all. And right now, similar to those machine learning techniques, random forest, pretty simple. Later on, I can also, and also some other materials, and also let's say right now there are some nice algorithms in the finrl project, pretty nice, to help us to train all those features. So we can use those features like the Bollinger Band, moving average, and all those technical indicators to figure out when to buy, how to buy. I mean, one trade make money didn't mean anything. I want everyone in this class to understand that you need to have a systematic ways to compounding your investments while pay great importance to managing your risk, right? We only make educated investments when we had balanced the return and the risk. Okay, that's it. This is just some basic description. Later on, I will put all those materials on the GitHub. Yeah, all those things are free, including this class, right? And lastly, I would like to recommend you guys to read some books if you guys truly want to make money in the financial markets. First is you do need to read the Berkshire's letters and understand Buffett's source. Pretty useful. Another thing is the Man for All Markets, Edward Thorp. A lot of trading techniques there. Actually, you can get it from. Another one, the man who solved the market, the Gene Simmons. Some people said, I cannot find some trading secrets in those books. Actually, I found that they had already disclosed many things there. For example, actually right now we are in recession period, right? We are in recession period both in China and potentially US based on many indicators. Actually, just trading in recession environment, Jim Simmons, he had already proposed some nice trading strategies by using some simple mean-reversion or Markov things. Actually, in this book, it had also mentioned that these guys had already applied very early stage machine learning techniques. Let's say trying to use the similar history environment to predict the odds of the proper trading, proper investments. Okay, I think that's all. I think that is already too much for this tutorial. Hope I can see you guys later. Bye.